Welcome to The Explainer. We're going to talk about something today that honestly trips up a lot of people. Bank accounts. We're going to cut right through all that confusing jargon so you can figure out exactly where to put your money so it's working for you, whether you're just buying your morning coffee or saving up for those big, long-term dreams. Have you ever felt like you're just swimming in this alphabet soup of banking terms? MMAs, CDs, APYs. What does it all even mean? Well, if you have, you are definitely not alone. So let's just dive right in and figure out what these things actually do, and more importantly, which ones you really actually need.
Okay, so here's how we're going to break it down. We'll start with the basics, the accounts you use every day, and then we'll build up from there, all the way to making some really smart choices for your financial future.
All right, first up, let's talk about the account you're probably going to use more than any other. This is really the command center for your day-to-day financial life.
And that's your checking account. It's really all about one thing: access. Think of it like your digital wallet. As sources like Bankrate point out, it's just built for money constantly coming in and going out. You're paying bills, swiping your debit card, you name it. It is the absolute workhorse of your financial life.
Okay, so we've covered the account for your spending, but what about the money you're not spending? Let's talk about how to actually grow it. We're going to shift gears now from just holding your cash to making it really start working for you.
And honestly, this is the question you have to ask yourself. Is your money working as hard as it could be? Because if you've got cash just sitting around that you don't need for, immediate expenses, it's just not pulling its weight. That money should be out there earning interest for you, literally while you sleep.
Okay, but here's something really important, and it honestly catches a lot of people by surprise. As your money grows and earns interest, guess what? The IRS sees that as taxable income. Yeah, so according to Investopedia, your bank will send you a tax form if you earn more than $10 in interest. And listen up, because this is crucial, even if you earn less than that and you don't get a form, you are still legally required to report that income. So just keep that in mind.
So this table does a great job of laying out your main options for growing your savings. And what you'll see, based on info from places like Bankrate and Bajaj Finance, is a really clear trade-off. It's all about how easily you can get to your money, that's called liquidity, versus the interest rate you'll get. Generally, the easier it is to access your cash, the lower the interest rate. And the harder it is to access, well, the higher the rate. It's a classic trade-off. So let's start with the classic savings account. This is your high access but lower interest rate option. It is definitely not for daily transactions, like a checking account. Think of it more like your digital treasure chest. It's the perfect spot to build up an emergency fund or save for a big purchase. And that's why most banks limit you to maybe 6 withdrawals a month. It's really designed for saving, not spending. All right, next up, we've got the money market account, or MMA. You can kind of think of this as a savings account that's been upgraded. It's got a few perks from the checking account world. Like, as Bankrate mentions, you might even get a debit card or the ability to write some checks. But you're still generally limited in how many transactions you can make. It's really the sweet spot if you have a larger chunk of cash that you want to earn more on, but still need to be able to get to relatively easily. And that brings us to the Certificate of Deposit, or CD. Now, with a CD, you're basically making a deal with the bank. You're saying, hey, I promise I won't touch this money for a specific amount of time, say 1 year or 5 years. And in return, the bank gives you a higher, guaranteed interest rate. It's locked in. But here's the catch. As Bajaj Finance points out, if you break that promise and take your money out early, you're going to get hit with a penalty.
Okay, so we've covered spending and saving. But what about more specialized accounts? Some are designed for very specific jobs, things like buying a house or even managing a disability.
So if you own a home and have a mortgage, you've probably heard of an escrow account. And here's how it works. According to Wells Fargo, every month when you make your mortgage payment, a little piece of that payment gets set aside into this special account. Then your lender uses that money to pay your big bills for you, like property taxes and homeowners insurance. It's basically a forced savings plan, so you're not hit with a massive bill once a year. Now, this next one is an incredibly powerful tool. It's called an ABLE account. The National Disability Institute explains that this is a special savings account where money can grow tax-free. And here's the really amazing part. The money in this account generally doesn't count against eligibility for critical benefits like SSI and Medicaid. This is a game changer because it allows individuals to save for their future without worrying about losing the support they rely on. All right, have you ever heard of a sweep account? It's basically an automated tool to make sure not a single penny of your money is just sitting idle.
As Investopedia describes it, at the end of every single business day, the account automatically sweeps any cash over a certain amount into a higher interest investment. It's kind of like having a tiny financial assistant working for you 24/7, constantly optimizing your cash. You can see why this is super popular with businesses trying to manage their cash flow.
Okay, that was a lot of options, right? So the big question is, how on earth do you decide? Well, don't worry. Let's build a really simple framework to help you make the right choice for you.
First things first, where do you even open these accounts? You've basically got two main choices, banks and credit unions. And NerdWallet points out a really key difference. Banks, they're for-profit companies. They have shareholders to please. Credit unions, on the other hand, are not for-profit. They're owned by their members. That's you. And that difference often means you're going to get better interest rates and lower fees at a credit union.
So here's your game plan. And this comes from advice from NerdWallet. Now, I really want to stop and focus on step one for a second because honestly, it is the most important part. Before you even look at a single interest rate or a fee schedule, you have to ask yourself one question. What is the specific job that I'm hiring this money to do? Seriously, is its job to be ready at a moment's notice for an emergency? Or is its job to just sit there and grow, untouched for 5 years while you save for a down payment? See? Once you define the job, it becomes so much easier to find the perfect tool.
And that's really what we'll end with here. The goal isn't just to have a bank account. Anyone can do that. The goal is to have the right combination of accounts that actually match up with your financial life. So I want you to think about your own situation. Take a look at your accounts. Is your money really in the best possible place to achieve your goals? Now you have the tools to figure that out and to make sure it is.